Okay, so it should be good there. So now what we're looking at here is the market basically and we could puke. I mean, we could puke here into the close, although there's a lot of support here. The idea is, are we going to either trade sideways to higher, into the last hour here? And again, it's expiration and all that. So the things that I'm looking for then are going to be the internals, the main internals that I like to look at here are going to be this is the NYSE tick, and it just measures the buying and selling pressure. And you can see it's been pretty quiet today. We've had a lot of ticks between plus and minus 500 with a little bit of spike. Okay, and that just means that there's really not a lot of action going on. This is the 5-period simple moving average on a 5-minute chart. When it's quiet, and so if you think of the tick here as a couple of things that I like to watch intraday. So there's extreme moves. So extreme moves typically are plus 1,000 and minus 1,000. And we've had a couple of extreme moves to the downside today and none really to the upside. So that's extreme moves. And I call that just kind of momentary blips of conviction. Kind of like when somebody has 3 beers and they have a good idea, it's this momentary blip of conviction. And then we have what's called steady. Okay. And the 5-period, if we're down here, even though it's not like the market's falling off a cliff or anything, it's steady selling. Up here, it's steady buying. Okay. And you can see we've kind of crossed from steady selling into steady buying. And is that something that's going to be able to last? Okay. This is actually really good action here. I don't want to get too excited. I like the idea of a short squeeze into the close. Nothing like a good short squeeze into the close to get things going. So let's come back over here and we're going to look at SPX. And then I need to get some there, bada boom. And then I've got a couple of alerts going off here. Yeah, I bought those that QQQ put debits, put credit spread back. We got that. Okay, a couple of chart alerts happening there. And so now we just kind of want to see, we're at 41.53 again. I think the odds of us going to 41.75 are kind of low, but certainly not impossible on a day like this. Oh, thank you, John. Let's take a look at Microsoft. I like that idea. So a little bit bigger picture, we also have earnings on Netflix today, and I just, that's going to be interesting. Obviously, there's a kind of the all eyes on Netflix today. I do think that if they're reasonable, that we are going to test 4,200 this week. That's not a huge stretch from where we are right now. There's a lot of open interest on the SPX at that area, and that can simply act as a magnet. And so I think that the opportunity to test 4,200 this week is high, to the point where even throwing on a butterfly for Friday's expiration makes sense. But that being said, let's go ahead and look at Microsoft. Microsoft does have earnings next week. Is it this week or next week? Today is the 18th. Earnings on, okay, so next week. And you can see we're just kind of caught back and forth between these two snow lines here. However, if we look at a daily chart, you can see there's a squeeze developing, which I love. But more importantly, when we have multiple squeezes setting up. So we got the daily squeeze setting up, but then we got the 4-hour, the 2-hour, the hourly, the 30. And these are kind of like the fuse that can light the bomb. So like the 30-minute goes off, the market pops up, that causes the hourly to fire long, and then the 2-hour, and then the 4-hour, and then the bomb's the daily, So I just kind of look at the idea here is, can Microsoft work its way, can it kind of rally into earnings? And I don't hold through earnings, but you can see here, see how Microsoft kind of rallied into earnings there. And sometimes it depends on the market structure too. But here, we rallied from 234 to 250 in 3 days. Okay, so that's it's a solid 16 points on Microsoft. And yeah, when earnings came out, it got trashed, but I don't hold through earnings just because of that. Holding through earnings is kind of whack. So I like the idea of trades into earnings on Microsoft. And I added a couple of options on here last week. They're not doing too hot. I got the 280 call at 1290 and it's at 1190. And then I got the 300 call at 302 and it's currently dropped a little bit. So I actually don't mind picking up a little bit more. And so what I'm going to do is I'm going to go 10 days out. And I'm going to come over here to the $300 calls. Now, first of all, you might ask, John, why in God's name are you buying an out of the money call? Isn't that like a total noob trader mistake? And the answer is most of the times, yes. When you buy an option during the same week that earnings are out, what's the IV doing that week? It's going steadily higher into that. So it's one of the only times that you could buy an out of the money call and the theta decay is minimal. Now, obviously, if Microsoft goes down, your option is going to go down. But if it's trading sideways, you're not completely dying. Okay. And so it is one of the few times where buying an out of the money call makes sense. Conversely, doing a spread is a horrible idea because of the rising IV. So if you do a call debit spread, it can actually work against you. So for this particular one, I'm going to go ahead and pick up some more of the Microsoft. And again, this is a trade that I want to hold into earnings, but not through earnings. Okay, not through earnings. And I'll post this on here so you can take a look. Obviously, Microsoft is liquid, no issues getting filled, which is always nice. I was looking at Chipotle options earlier, and my gosh, you could drive a Mack truck through that. I'm picking up some additional out of the money calls on Microsoft for next week with the idea we could run into $300 before earnings. Note, I am not planning to hold through earnings. Okay. All right, so there's that, and that's Microsoft. So I like that. Another question is, for Netflix, we have earnings coming today, right? And I am going to pass on doing a trade here. Sometimes what we'll do, the expected move is 30 points, so it may well stay within that. And the trade I kind of like here, and let's revisit this in a little bit. Oh, 335, that's why. And so, one idea here is you could sell the naked straddle, and don't hold me to it yet. So if you sold the naked straddle, okay, obviously you could get about a $3,000 credit, but your max loss is infinite, right? So a 29.37 credit. Well, that's attractive, and that's essentially a bet that it's going to move less than $29.37. But if it moves $100, you get smoked. And so instead of doing a naked straddle, what we like to do is essentially you sell the at the money call, sell the at the money put, and then buy wings that are wider than the expected move. Now, this expected move is good, but what's better is the expected move for the rest of the week, because remember, and that's not much different. So $30. If we round it up to $30, is there something to do there? And so here, then I could just go sell an iron condor. I want to sell the at the money call and the at the money put, and then I could go $30 below and buy the 305. Let me get my math right here. The 365 call, which is 30 points above. Where am I there? And then 30 points below is the 305 put. Now, that's a 2070 credit. Okay. Now, it's not as attractive as the $29 credit, but instead of having an infinite loss, you can measure what a max loss would look like. So a max loss would be $930 and a max profit of 2070. And basically, what we're looking to do is our target is about 50% of the credit received. So if we sell it at 20, buy it back at 10. Now, look, if you've got a $5,000 account, is this an appropriate trade to do? Absolutely not. And unfortunately, there's really not a good answer for that because you can't trade half lots, right? And if you do it more narrow, you can go a little narrow, but that kind of defeats the purpose as well. But I like this. But let's come back closer to the close and look at it, because it may have moved to a different strike at that point. YOLO that 5K. Do it. Do it. But I will plan on doing that trade, because then tomorrow morning we can manage it, just to give us something fun to do together. It's good to have some bonding experiences. All right. So that's Microsoft. Another stock I've been watching here is Servicenow. They've also this has been they've got earnings coming up. We caught a nice squeeze here, and this thing just exploded higher, and now is just kind of back and forth. This is another one that also kind of gets a little goofy around earnings, and you can see here we had this nice run into earnings here, and again, after the fact, I'm not, it doesn't really matter. So it's been holding up pretty well today, and on this particular one, gosh, the 470 calls, they're about 870, so that's a little out there. Um, I want to see what when is that? 420. Oh, next week. Okay, so the next week options on this are pretty pricey. I'm just looking real quick, like the four. Yeah. So the problem with this stock is it's thin and the options are pretty pricey. So we were able to pick up those Microsoft calls for $2.20. If we were going to do the equivalent $500 calls, they're $7.40, which I actually kind of like, but it's a little pricier. It's a little pricier. So on something like that, you just got to be a little careful. Another one I was looking at though. Message of Bob. Hey Bob, how's it going? Yeah, good to see you. Yeah, 10 years goes by pretty quick, right? I think 10 years ago, what year is this? The 2013. So I was probably broadcasting from I don't know if we were in our offices then off out in Austin, or if we had 3 condos that we had put together and those were our offices. But yeah, time flies when you're having fun. Da, 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 da. Out of the money call went down. Yeah, so Nick, the out of the money call will often go up because of that very thing. It gets excited about earnings, and sometimes those out of the money calls will retain the premium. So we'll see. I mean, now has actually had a couple of good bounces the last 2 days, and let's see what it can do, like tomorrow. So Chipotle's also has earnings coming up, and you can see that this stock also likes to run into earnings. This is another example of a stock. Here, it ran at earnings and then sold off. Yeah, kind of meh into earnings, although the markets were having a tough time then. And then the problem with Chipotle is this is one of those things where the options, so here's that, here we are, right? And so let's just say we go and look at the $1,800 calls. Well, they're $47, $2 wide spread, but they're liquid and they're trading. And so I like doing stuff like that, but for now, in terms of a run into earnings, I'm going to stick with Microsoft. And then towards the end of the day, let's go ahead and we'll take a look at Netflix as well. So we got, Microsoft for the run and then Netflix for day of. What about them TLTs? Okay. So now let me come back and let's check in on the S&Ps. So we had this weird flush that was annoying, and now we're kind of coming back up. We're at 4154. Remember, 4150 here is kind of a magnet, but also is so 4175 is too. And at this point, though, we got 45 minutes left. So a move to 4175 would only happen if we get some major buy programs, which could happen. But that's a little far away. If we kind of drill down here on this is like the day trading chart. We've got some key times of day coming up. So key times of day are 8:45, 9:20, 9:40, 10:30. That's the European close. And then right now we're rallying into 220. And oftentimes between 240 and the close, you can get some interesting things to happen. We have tested this micro snow line 1, 2, 3 times. Typically, if you're coming up a 4th time, the odds of it going through are pretty high. Okay, and there's a saying in the hedge fund world, the first test you fade, the next test you go with it, meaning you're expecting it to go. So then the question becomes, does the SPX break through? And notice that the ES, of course, and the SPX are trading about 25 points apart. That's normal. Futures is a future price. Cash is the price. Are we going to be able to push through this and get a run? Possibly to 4175, which again I think is a low probability trade, but maybe we throw on some type of a butterfly for it, or maybe we push through and then we sell off back to 4150. So that's kind of what we're looking at here. Yeah, yesterday's pattern, repeating today. If we switch this to the SPX, we did get a nice little rally yesterday and come back over here, and you can see that that was the gap up this morning. So from about 130, we bottomed and we just had this nice rally, 220, 240 right into the close. And, that was 28 points. And so, the possibility is certainly there. But for that to happen, let's look at yesterday's ticks, right? What did yesterday's ticks look like compared to today's, starting at 130? And you can see that they weren't tremendous. We did have a lot of nice plus 500 ticks, and we got some extremes into the close. It wasn't, yeah. So yeah, certainly positive. And if we look at where we are right now, we're kind of here at the zero line. The moving average is in the right spot, but if we're going to get a rally here, we got to get these actual ticks back up to about plus 500. Obviously, more is fine, but you got to at least get that. And if advanced decline goes positive, that we could incur some short covering there. And also, we want to look at MOC. It's too early for market on close, but if you guys see any numbers there, that's always interesting. It doesn't matter if it's like a couple $100 million, but sometimes you get some random, oh my gosh, it's 2 billion to buy or 2 billion to sell, kind of stuff there too. And yeah, so we're looking at this. Let's come back here and take a look at this. So we are trying to get something going here, and again, we'll see if the fourth test is a charm, so to speak, in that quiet action. Okay, there. Onion and dual. I always like DePauli when you get uh you always what I like to look for, so you typically find some good ones. Okay. Onan. I thought it was an onion. Yeah, I mean that's a really awesome looking chart. Um, let me bookmark that one. I like that one a lot. So the way I look at this is that I love the setup, and then I always like to say this to me is the buy zone for swings, meaning that this is the 21 daily EMA and then +1 ATR to -1 ATR. So since we're through it, even though this looks like this could actually just rip here, and that's which I like that. Oftentimes if you're patient, it'll come back, especially since we just started it. So that's one to keep an eye on. And then dual, do. Come on. Oh, I just broke Thinkorswim. I'm gonna clear my garbage out real quick. Connect garbage. Oh, geez, no wonder. 26 gigs. Oh, did I type it in right? That's weird. I don't know I don't know what happened to that. Let me see if anything else is coming up. There we go. Yeah, so let's keep an eye on those as they come back. One of the things I like to do, let's go back to that Onan, not Gonan, Onan. So when I see a stock like this that I like I would love to buy it here, right? Now, how many times have you seen something like that, said that, and then you just forget about it? So what I love doing on stuff like this is I'll come over here and just say, all right, since this is a swing trade, I want to go at least 30 days out. And we're at 32, this is at 30, and so I just want to say, like, look, if this drops $2, I can go to the theoretical price here and just say, look, let me know if this drops $2 over the next couple days. This is not critical. It just takes into account premium decay. And then typically I want to get kind of an in the money option here, so let's call it the 27.50 or the 25. So this is just saying, like, look, if this thing drops $2 over the next couple days, the 27.50 call, which is now 5.40, will be trading at $3.61. Okay, I can work with that. And then I come over here and just say, like, all right, not a ton of volume, that's fine. But what I can do is come over here and just say, you know what, let me place an order to buy 10 contracts at $3.60. And you can do this as what I call a pilot position if you want. Like, let's just say normally your position size is 3 contracts, do 1. Okay. Sometimes I will build up to 100 contracts just depending on the setup. So this for me, I call it an entry pilot. And then I'm gonna put this as good till cancel. Okay. And then what I love about these is sometimes I just forget about them, and like a week from now, I'll get some alert, like an order executed. I'm like, what just happened? But it's this planned out trade that I did like a week prior. And I'm letting remember, your platform is like an employee. Put it to work for you. You don't have to sit there and stare at the charts all the time. And I think that's a really good use of resources there. So let me place this order here. This. Okay, there we go. This is a swing trade. I don't expect to get filled today. So this is a GTC good till cancel order. I'd like to buy this daily squeeze setup on a pullback to the 21 EMA on the daily chart. Right. This is a limit order to buy a pullback over the next few days. Okay, so there we go. So we might not get filled, but if we do get filled, it's going to be a great entry. We did that recently with FSLR, and this turned into a double, and we got the flush. So we placed in a limit order. When we were here, it's like we liked it because there was a squeeze, but it was too high priced. We placed a limit order, got filled, took a little bit of heat the first couple of days, and then boom, and made 100% on our options. And what was nice about this is we saw this here, and we just let the platform do the work for us instead of staring at the charts and sweating over every tick. Yeah, let's take a look at BLDR. BLDR. Yeah, look, this looks great, but I wouldn't touch this with my mother-in-law's account, right? Because it's way, way, way extended. Now, if you got it, that's awesome. Trail up a stop. But one of the worst trading habits you can do is look at something like this and go, "Oh my God, this looks great." And I just say, like, if you've got any rules to help you with trading, just say, "I'm only going to enter at a 21 EMA," which means you are not going to enter at 3 ATR. Okay, so I agree. This is a great looking stock, and it's way the hell too extended to buy it. But yeah, if we can come back to the 21 EMA again, I'm all over it. So, and it depends, and that's obviously if you're trading options. If you're buying a stock and you're just like, you know what, I'm going to hold this for 10 years. Honestly, your entry doesn't matter. You just buy it because, over the course of 10 years, who cares? So, so a few things like that. Let's see what else we got here. I can confirm the ES will go up and down. There is um, there is a saying in the pit I always loved is that the S&Ps leave no stop untouched, and I always thought that was such a great quote and so painfully true. It'll leave no stop untouched. And remind me as we get closer. Well, let's look at we're going to look at that again. Let me come back here. Let's look at the SPX again, and then we'll look at Tesla. Tesla's been kind of meh. I mean, Tesla's a shadow of its former self. Obviously, I used to love trading Tesla. But really, after that, it's total split now, 15 for one. It did 5 for one, then 3 for one, and it was actually, obviously it was great pre-split the first time. It was actually pretty good after that 5-to-1 split, but after the last 3 for one split, it's a different stock. It still has shadows of its former self once in a while, but overall, it's just kind of a different and lame stock. All right, so yeah, so one of the things I'm looking at here, and of course, this is just kind of my day trading setup, and it's been so quiet today. So we rallied into that T220 key time of day, and now, and this tree line is a monster. If we can get through this, it's 41.56. We could rip into the close, and so I want to keep an eye on that as a potential play. But 41.50 is also a magnet here, and so do we just kind of end up settling here? I am looking for market on close numbers. If you've never heard of that in Thinkorswim, and they used to be awesome, now they're only okay because I think they print them late now, honestly. But if you just go to Trade Flash, and what I do is just edit it out. I just uncheck big delta, large equity trade, and large futures trade because it's worthless. But I'll look at Trade Flash insights and then trades on a liquid option. Sometimes those are interesting. And then what I'm looking for here is the MOC. And there's other places to get it, but that's an easy place to get it. So when it pops up, I'll drag it over here and show you what it looks like. Yeah. Oh, energy stocks. Energy is doing good today. If we take a look at, I saw ExxonMobil. One thing to keep in mind here, yeah. So Tesla, maybe a pop into earnings, but it's honestly been pretty disappointing here. ExxonMobil. So this is a really good lesson on the news. So I don't know if you guys remember this, but back that crazy day when oil went negative, and ExxonMobil, obviously, all oil companies were having a tough time then. And if you come back here and you look at the weekly chart, you see how low it got. Okay, and literally on I think it was on this day on CNBC, they came out and said basically there's no reason to invest in the energy sector. It's over. And from that moment on to today, it's up 290% plus dividends. So just remember, and it's a good lesson that think of today's headlines and how everybody's freaking out over them, and how in 2 years you could realize that how wrong they could be. And frankly, most news headlines are, extremes that really don't mean anything beyond the short term. But I always reminds me of that when I hear people getting worried about the headlines today. Just remember, in 2 years, it ain't gonna be like that. It's gonna be totally different. And guess what? They're gonna find something else for us to be nervous about. That's the goal of news, is to keep us angry and anxious, because then we'll stick around for what? The commercials. So remember, they are a commercial delivering mechanism, nothing else, and it's always important to keep that in mind. Yeah, you guys remember peak oil? I mean, that was a big thing too, and all that kind of fun stuff. So everything's got to be scary. Speaking of weekly chart of oil, this is actually pretty constructive. It's getting a little bit bullish. One of the things I like to look at too, in terms of a big picture. I've had a lot of questions on gold here, and one of the biggest developments right now on gold that's happening is the monthly squeeze. And this monthly squeeze, to suffer is to suffer. Suffering, we are. That was my worst Yoda impression. So if you look at a monthly squeeze only happens like every 4 or 5 years. This is the last monthly squeeze on gold, and you can see gold, rallied like $800 an ounce. There's another monthly squeeze on gold, and so I think we may get something where we see $2,500 an ounce on gold. Now, look, it's gold futures are one of the hardest things to trade for bigger moves like that. I always say that the easiest way to trade a potential big move, on futures, or even if it's GLD or something like that, that's when you go out and you get that. Let's look at gold, right? And the nice thing with gold futures is that, for those of you that don't know, obviously a one options contract like on Tesla represents 100 shares of stock. One gold futures contract represents one gold futures. So you could come out here to August, 99 days out, and say, okay, yeah, $2,400. That looks like a reasonable monthly move. And we got to look at a lot more strikes. So let's look at all. And we could come over here and scroll. And you could also do this in GLD, of course. But I just saying, like, holding gold futures through a move like this is almost impossible. So if you say, okay, I'm going to buy the $2,400 future strike price, and I'll sell the 2,500 99 days out. Okay, well, what does this look like? First of all, it's 100 points wide, or 100 points wide. All right. And if we look at this as a one contract, just so you can compare apples to apples, it's going to cost you 260. So your max loss on this is going to be $260. If it doesn't work, you're going to lose $260. If it does work, you could put in let's just say it goes through 2,500, you hold through it. The max profit would be $9,740. So on something like that, that to me is how you play longer term, where if even on if you have a $25,000 account, if you lose $260, you can recover from that, right? But if it went to max profit, your account just went up by a third. So I do like stuff like that. I think that I think things like that are just kind of interesting. And then if you want, I will just post this for anybody that wants to do it. This is the call debit spread on gold futures I talked about, where the max risk is $260 per contract with a potential max profit of 9,700 should it get through 2,500? This expires in 99 days to give time for the monthly squeeze to play out. Okay, my computer is thinking. There we go. All right, so that's that. If that's something that you wanted to do. Yeah, so you can of course do the same thing in GLD. I don't know exactly what the equivalent of 2,500 is. I think it's probably about 230. No, it's 186, $15 below. So that would be 225. So you could do kind of a similar thing here and just say, okay, I'm going to go 94 days out to July and do the two. So 225-ish would be 225. Yeah. So then you could do like what it would be like 215, 225, something like that. And that would be 40 cents. So that would be another way to do it. And so, per contract, you could lose 40 bucks, 215, 225, right? And then on a per contract basis, it's like, okay, well, what if this doesn't work? Well, you're going to lose $43. And if it does, you'll make 9,500. And if you wanted to make it closer, of course, to the same specs as one futures contract, then you would do about 10 lots. It's not going to be perfect, but here you go. Max loss is 430 against a max profit of 95.70. Right. So I like those because it's what I call asymmetrical risk, meaning that, okay, look, if it doesn't work, it's not the end of the world. It's like a day trading loss. But if it does work and you're able to, hold on to it, then it's certainly a very, very, very interesting trade. You can like calendars and stuff like that. If you understand how they work, that's totally fine. For me, like a longer term directional trade like that, I kind of like doing it that way. But with options, there's definitely a couple ways to skin the cat. So I always say just feel, and stuff like that, the more kind of options knowledge you have, if you've got the underlying idea, looking for looking for gold, monthly squeeze to fire along, and it's going to get to 2,500 bucks. And then you can construct, a lot of different kind of asymmetrical risk opportunities around that, which is great, of course. Okay. So, oh yeah, for GLD equivalent, GLD equivalent is July calls 215, 225 at around 45 cents. Yeah, so what is my take on the overall market? So I'm just kind of looking at my whole thing is I thought we bottomed back in June. And the reason for that is that's the only time we've had capitulation. So this was right here. So this move right here was the second fastest decline in the history of the S&P 500. And that is what capitulation looks like. Capitulation basically is what you need to form a bottom. Now, what happened is we came back down, we retested the bottom, and it actually got a little ugly. And it looked like we might, go lower. But now, if you look at this, we've basically been in a range since then. It doesn't really feel like we've been in a range because it's so wide, but we have been in a range from basically, let's call it 3,600 to 4,300, or since then. And so now I'm just looking at we're going to the top of the range. So I think we got a little bit more to look at here, but I'm certainly not looking at, oh my God, the market's bullish and, all that kind of stuff. We're just in a big range. Now, the guideline I use for this is the 10-day moving average of the put call ratio. And I found this very, very helpful. So here you can see this is the So this is the P call on Thinkorswim. I've just got the background. I've got the actual price kind of not hidden, but it's you can see it's kind of a darker. It's almost the same color as the background. And why do I do that? Because it's meaningless. Like I don't care what that's doing. What I am interested in though is the 10-day simple moving average of the combined equity and index put call ratio. Now, why is this important? Typically, when it's over one, everybody and their mom is bearish. And typically, at that point, when everybody's bearish, that's when we rally. Okay. Then, when everyone here is bullish. So at 0.80, it just means everybody's bullish. And when everybody's bullish, we fall. Okay. This was so here, everybody's bearish. We rally. We're destroying shorts. And then we got up here. Everybody suddenly get, oh, look at the bull flag. Everybody's bullish. We kind of fall apart. There's the banking scare. All that kind of fun stuff. And then guess what happens during the banking square during the banking scare? Everybody gets bearish. Okay, so I think we're going to rally until this gets to about and this is not exact, obviously, but I'd like to see us kind of rally, possibly test the August highs in the Nasdaq and the S&Ps, and then we set up some swing short trades. So I do see this market as a lot of back and forth like that. Tech obviously is under a lot of pressure with interest rates, and then at some point, if the Fed starts cutting rates, which they may end up doing later this year, then you'll see some more positive inflow into tech and things like that too. Um, okay, so let's come back. What time is it? 2:40. Okay, so we need to put on that Netflix trade if we want to do that. And then SPX. So SPX looks like it's going to pin at 41.50, kind of break our hearts. It would have been nice to see a run to 41.75. That would have been fun to play. For 41.50, we can do just kind of an at the money iron fly with 20 minutes left. It can get a little dicey, but we'll just kind of see where that closes. But let's focus on Netflix here. I'm watching for the I'm trying to find my active trader window. I'm also watching for any MOC numbers. 350 million to buy. So it's basically a nothing number. So you can see it's popped up here. Now it can change. What you want to see is that you don't see like 5 billion to sell. Then the market can kind of tank. 350 million to buy. Okay. So maybe we just grind a little bit here into the close. And that's just kind of the net, buy and sell numbers at the end of the day from redemptions and all that kind of fun stuff. Yeah, so why is gold going to rise? So a lot of times people think gold rises because of inflation, and it's not so much that as a hedge against falling interest rates. So gold has been under pressure because of the dollar, right? The dollar was so strong. Now the dollar's come off. Gold is starting to benefit from inflation. But also, what gold is saying, gold is sending us a message that inflation ain't going back to 2%. Inflation, probably the new normal for inflation is going to be 4 to 5%, and kind of like the 70s, in a couple of years, it's probably going to get worse. Like we're going to see an 8% spike again or something like that. So that's what gold is saying. So remember, gold is kind of telling us what to expect, not reacting, to the current market so much. All right, maybe we'll get something going. Okay, let's come over here and look at Netflix, and then I'll hang around here after the close, and we could look at Netflix together. But okay, we're basically at 335 still, so we haven't moved very much. So I will come over here and let's do 335. Now the way this works is we're not going to be able to do anything until tomorrow's open. So I always say, look, assume it's not going to work, and that's how you do your position sizing. What we're basically doing is we're trading on the same side of the market makers, and the market makers have priced in a $30 move between now and the end of the week. And we're just saying, you know what, Mr. Market Maker, we are with you on that. We are not going to fight you. And a lot of times they get it right. Sometimes they don't. And the other thing I like about this too, though, is that let's say we wake up and it's this huge move, we have the option to buy back the short call and let the long call run, or vice versa. So the setup does provide some flexibility. So on a well, again, let me just review on a one lot basis here what we're looking at. And on a one lot basis, max loss is 928 against a max profit of 2072. So if a max loss of 978 is not appropriate for your account, then this is not in a trade. This is not a trade for you. Okay. There's some other trades we could look at, but not this one. Okay. So let's see where we are on that. Blah, 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 blah. Let me just do some price discovery here. I'm going to try to get filled and then I'll post this. I got filled at 2072. Bum, bum, bum. Copy. Okay, here we go. All right, this is an earnings trade on Netflix. The bet here is that it will stay within the expected move of $30. Generally, if I can buy this back at 30% to 50% of the credit received, I'm good. So, we could buy this back at like 14 bucks, that would be awesome. And then, yeah, if you're here in the morning, I will, I'll be around in the morning too. I think I hop on the mic at 9:30, but even at the open, I'll be around just kind of like, hey, this is what it looks like. This is what we're going to do. And even if Netflix, like, gaps up, it could sell off, or if it gaps down, it could rally. And we'll hang around. We can hang around here after the close and kind of see how it acts. That's always interesting. Yeah. So, well, on the SPX, the price of the if the price of the ES is below the 30, and the price of the SPX is above the 30, which one do you follow? I've found that I just look at the cash index for that. So it's a good question. The cash index is kind of a little more, and you can see it really honors that, right? So the cash index is really kind of more reflective because you don't have that overnight weirdness. So I have found that, when in doubt for the moving averages, I look at the cash index. Mm. So that's what we got there. So let's kind of see. So we've got if we come back over here and we look at the internals, they're pretty decent. SPX is at 41.55. Again, it would be fun if we could get a rip to 41.75, but it's certainly being a little stubborn here. Let me close this one. Okay, let me post this micro voodoo. Everyone for the spy calls that expire tomorrow. Till the next class. All right. Okay, so there's that. So wow, really slow motion action here. All right, just looking at my alerts here. So we had some spy calls. Just close those out because we're getting a small rally here, but not much. Chart alert, blah blah blah. Okay, nothing too interesting there. So what I've done here, this thicker one, that's the 10-minute. So that's the one I just want to pay attention to. So when this crosses above zero, I just want to know. typically that's when you get kind of some, some better moves. And then from a kind of a longer term, well, longer term perspective, from the perspective of short term trading, I guess I should clarify that. Let's see. I'm just looking for, I'll look at something like this where, okay, here's the 30-minute chart of the S&P futures. We're starting to hook higher here. What's nice about this, like, so this is the 5-period exponential moving average on the daily chart. So you can see we came down hard and we held that. And the 5's on top of the 8, which is on top of the 21. So we do have ascending moves higher here. And, a little disappointed today that we came down and that was it. Like, I thought we'd actually get a decent retracement higher, or could we even at least test the 8? This was just kind of a big nothing burger today. It's amazing how quiet it is, honestly. Well, I guess, just that whole monthly expiration and all that kind of fun stuff. And then if we look at the SPX, kind of the same thing. We had a 20-minute sell signal, 20-minute buy signal, 20-minute sell signal, 20-minute buy signal. But you can see this 21 EMA, continues to march higher. And then if we flip this and we look at NDX, the NDX really has had a tougher day today. It started off pretty nice, came down hard, and then just kind of traded sideways. And that is kind of that typical monthly expiration. Like, let's just suck the life out of this market, and which is basically what happened. And you had, Microsoft had this great gap up and just, puked it up. And there was a potential for some interesting there, and it just came down. So you're seeing a lot of this, I think, option related kind of pressure, especially in tech stocks. Now, if we look at, like, say, ExxonMobil, ExxonMobil isn't necessarily feeling this pressure, and in fact is near the highs of the day. Part of the reason this market is trading in such a wide range is that while inflation and rising interest rates are bad for some stocks, i.e. tech especially, it's actually beneficial for other stocks, like energy stocks, and even consumer goods, where anybody that can essentially raise prices. So that's one thing to look at too. And one thing too, and I think a lot of people that don't trade or don't look at economic numbers understand, is everybody's kind of relieved, like, oh my gosh, inflation is coming down. Okay, inflation was 8%, and then oh my gosh, it's down. I don't, it's down to 5% now. So they believe that prices are dropping. That's not true. What's happening is that prices are still going up, but instead of going 8% a year, they're only going up 5% a year, right? So the prices raises that we've seen, they're not going away. Chipotle is not going to reduce prices in its menu. Spirit Airlines, they're not going to reduce prices. And so it's important to understand that prices are not going to go down. Sticky inflation, it just means that the price rises are slowing down. That's why the government, or the Fed targets 2% inflation, because slow, steadily rising prices are good for everyone. Not necessarily the consumer. It's good for business, good for the economy. Whereas, but if it's 8%, that's bad, which is understandable. But certainly it's better than other parts of the world where they're seeing, double and even triple digit inflation. Someone had asked earlier, it's like, oh, aren't you worried about hyperinflation? Not in the U.S. The only way we'd get hyperinflation in the U.S. is if the government decided to take away all private business and put it in the hands of government bureaucracies. Then we could see hyperinflation. But that would be about impossible. That would be about impossible in this country. Anyway, that's how things like hyperinflation happen. Yeah, and then there's always gonna be talks of, government debt default in the US, and, how many times has that happened? Oh, they always figure out a way around it. So it's just things like that. I mean, we all know that this is not healthy, but it is kind of, certainly easier to kick the can down the road. Why? Because everybody in office wants to stay in office and they don't want to get voted out. Now, the one thing that's interesting too, it's going to get interesting, is, so, talk about all the debt, right? So way back when, before the 2008 financial crisis, we had 4 trillion in debt, and these are approximate numbers, by the way. Our annual interest expense was $385 billion. Okay, that's paid by the taxpayers. And then we jumped debt up to 25 trillion, but rates went from 5% to sub 1%. Guess what? Our annual interest expense was still $385 billion. So we were able to service the debt. What happens is if we have to still service 25 trillion in debt at 5%, well then the interest rate goes to like 1.8 trillion a year, and they're going to have to raise taxes to pay for it. Well, no one in office is willing to do that. That's a lot. Annual revenue right now I think is 4.4 trillion in taxes. So that means it would be a substantial tax hike to pay that. So what happens? Let's start lowering rates before these notes roll over, and that's basically kind of the playbook there. Yeah, I mean then that's a good way to look at it too. And also remember too, inflation is good for debt. I always remember everyone's like, "Oh my God, when are we going to pay off all this debt?" We're never going to pay off this debt. It will never, ever, ever be paid off. You inflate, if you're a government, you inflate your way out of debt, and that's how that works. Or let gold go to $15,000 an ounce, and then they can pay it off with gold. Okay, let's come back here and see how we are closing. Oh my gosh, one last thrust. Are we going to get something here? And then we'll stick around and look at Netflix. We've got 6 minutes, so I'm not looking for anything too exciting here. It would have been cool to get 41.75, but doesn't look like it's going to happen unless we get a $5 billion buy program here in the last few minutes. Crazier things have certainly happened, but I think Slim and none have just. Oh, look at this. Okay, so it has jumped up 1.2 billion to buy. Now, if that was like 4 billion to buy, we could run up 20 points here. At 1.2 billion to buy, maybe we get up to 41.60 or so. So we got about 5 minutes left here. Empuje ticks have been nicely positive. But remember, the S&Ps today have been down. They were up, after the gap up. Then for a long time they were down 7, and then they were up 5, and that's been basically the entire day. So it actually has been a very, very, very quiet day. Hey Terry, that's a good question. The answer to that is I don't know. I've done that before where I've just kind of done them, like that. That's I don't know an easy way to do that, but that's something we can certainly check because I know it's harder to do that manually. I mean, the good thing is, of course, they're not changing every day, but I know that they can change and stuff like that too. So that certainly that could get annoying. All right, we're getting a little bit of a pop here. Nothing too exciting. We got about 4 minutes left, and then let's hang around and we can check out the we'll check out the what am I trying to say? The Netflix earnings numbers together, which will be fun. So in Thinkorswim, I just go to Trade Flash, and then what I do is just get rid of big delta, large equity, large futures. And then that way I'm just seeing like some, trades on a liquid options coming through, and insights. And then that way you don't get a lot of, otherwise you're going to get you're just going to be flooded with information that you don't need. Well, so Hudson, good question. So what happens if Netflix explodes or implodes after hours? Is there a way we could hedge with stock? So the only way I would want to hedge with stock is if I sold naked options. So if I had naked options, which I've done before, I have certainly hedged after hours when it exceeded the expected move. But since we did a spread, hedging after hours can honestly cause more problems. So let's say it tanks and you decide to short the stock to hedge, but then it turns around and bounces. Okay, so now you just turned what could have been a profitable trade the next morning into you locked in a loss. And so what I found with that is that if you have a spread, I wouldn't worry about it. You just kind of, you just accept what the max risk is on the spread. But if you are trading naked short options after hours, which is certainly a way more advanced technique for more advanced traders, then that's definitely definitely a tool in your toolbox that you want. All right, so we've got about 2 minutes left. Lorna, do you have the link for the, and we'll stick around for the Netflix. Do you have the link? What's the offer that we were talking about in the room for folks that haven't done it before? I can go over that real quick too while we're waiting for Netflix. All right, let's see. We got about a minute 37 seconds, and just kind of curious to see where we end up. This tree line here is just kind of a magnet on the SPX. Let's see. Does anybody have the link for what the link for this for the room? Last grind here. We'll see if we end up here in the last minute. Yes, still have NOW. Kind of nice bounce over the last 2 days. Let's see if it can get back up above 480 tomorrow. Oh yes, thank you. Okay. Yeah, so let's take a look at this too while we're waiting for Netflix, and then I'll show you how I set up Netflix as well. Let's see where the market just kind of ends up here. And we got about 4 seconds, and the SPX ends up at 41.54. So, again, kind of an interesting day here in terms of, just kind of a gap up and crap. It's kind of like, well, what was the extra move? There should have been a bigger move down or up, and we just didn't get it. And that's just kind of a, kind of how the ball bounces sometimes on these expiration days. All right. So for those of you that are, if you're joining us, first of all, welcome. We hang out and we trade the markets every day, which is kind of fun. If you are interested in this, got a couple of things happening here. So if you would like to sign up for the room, well, we have a coupon for you where you can get additional classes that are already in our store that you can apply to them. And of course, we've got the chat room that you're in. There's alerts that we post. So if you can't be in the room, you'll still get the alerts. We've got nightly newsletters that we put out with it. There's a weekly watch list. We've got monthly trader calls where we review the markets. And also, if you're newer to options and futures, you do get an options 101 and futures 101 that you can class that you can look at right away. And you can do one of two things here. You can do a trial for $7 and you can just kind of hang out for 30 days. And then, or if you want to take advantage, it's like, wow, this is great. Sometimes people come in here and it's like, look, I've been looking for a trading home. And part of it is learning, like learning different ways to trade, but also it's the community. So, a lot of times traders are they're either they've learned and they're fine, but they're looking for a community, or they're learning and they want to learn with the community. And you can certainly go a lot faster, with that. Oh, and let's look at Netflix. Looks like it just came out. And so if you want to do the annual there, you'll actually be able to lock in that savings versus going every month. All right. So that's that. And that's us who are in there and all that kind of fun stuff. So that's what that is, if you guys have questions on it. So now let's go over to Netflix. And usually when there's a big move right away, the main thing is just to kind of, it's always there's the initial move. And then after that, there is the call. So we'll want to see kind of what the call is, what the guidance is, and all of that fun stuff here. Netflix. All right, so Netflix initially whacked here, and we've got missed earnings. Looks like by 84.94, a little over 20 cents. Revenue is a little bit less than estimates, and they see 89. That's a typo. So it looks like they see, yeah. So now they'll give guidance and stuff like that too. So initially they gained 1.75 million subscribers. They axed the DVD rental business. Oh man, that's you think they would at least kept that just for old time's sakes. 235 million. Netflix added. So there we go. So initially it's going to start off a little, a little weak. Now it's going to talk about, the markets are going to have a chance to digest it and things like that. And a lot of times what will happen is even when it gets whacked, I found is like, so here's where we started, right? And here's where we are. Even if it gets whacked, a lot of times it'll come back to like, the midpoint, like 315. So if we do come back to 315 in the morning, that's an area where we can get out for a small gain or something like that too. So we have some flexibility there. And for some reason we open up down tomorrow and it's just really heavy, we could actually look at buying back the short put and letting the long put run. So there's a couple of different things there. Yeah, so tomorrow won't be dull. And then let's see how the S&Ps and the Nasdaq reacted. S&Ps, of course, the Netflix is not really a big part of the S&Ps, and the Netflix looks like the S&Ps are down like 3 points, like no big deal. Nasdaq, I'm assuming, is going to be down more. Yeah, and so Nasdaq down a little bit, not horrible. We're down about 30 some odd points, and we'll kind of see if that's it. If that's going to be pretty negative or how things shape up for tomorrow. All right. So that's what we got. I'm happy to stick around and answer some questions, but otherwise, really, we start getting prepped for kind of the next trading day. I've got the videos tonight, so I'll be starting on those and just kind of doing a market recap. The videos, newsletters are included with your trading room subscription. And then we're starting to get a little bit of a boost here. We'll see where we are in the morning. It'll be interesting to see. Otherwise, thank you everyone for joining us today, and look forward to seeing you mañana. Have a good one.